Hello viewers, so welcome to my channel. I am Hasham. So last video I have completed on the problems of computing income from salary. So according to the provisions of Income Tax Act, the total income of a person will be divided into five heads of income. Income from salary, income from house property, profits and gains of business and profession, capital gain, and last income from other sources. So out of these five heads, one head we have completed, that is income from salary. But comparatively, income from salary is the biggest head because many provisions are there. So there are many provisions regarding allowances, perquisite, profit in lieu of salary, deduction under section 16. All these I have explained in the last 20 videos. So if you have regularly watched those videos, definitely you got a good command on how to compute the income from salary. What are the provisions of Income Tax Act for computing income from salary? Now I'm going to start the second head of income, that is income from house property. Comparatively, this head of income from house property is smaller than the head of salary income. In salary, we have more provisions. Here we have less provisions. So normally students will prefer to learn quickly this head rather than going for income from salary, because easily they can be able to understand and easily we can compute the income from house property. But still, I'm not discouraging you. First of all, you should be perfect on income from salary. Then you should come to income from house property. So before starting the explanation of this head, income from house property, take a screenshot of the points which I have written. Then I'll discuss about when an income will be treated as income from house property. Come on. First of all, if a person receives rent from his own building, the income from rent is taxable under the head income from house property. So two things are necessary. A person should receive rent. From what they have to receive the rent? From the property. That means two things are there. The owner of the building must take some advantage in the form of rent. That rent is taxable under the head income from house property. So rent received by the owner of the house will be treated as income from house property. A person is having some property which is let out to a tenant, and from tenant rent is received. So Income Tax Act says this rent received from the property let out, that rent is taxable under that income from house property. Then use of house by the owner of the building. Normally an owner of the building can use the property in three ways. The first way is let out for any purpose. The house property can be let out either for residential purpose or for commercial purpose. For any purpose, the property may be let out. This is one of the methods of using the property. Second usage of the property is for running our own business or profession. A person is having the property and that property is being used by the owner for running his own business or running his own profession. This is the second method of using the property. Third method of using the property for own residential purpose. The owner of the property is using the property for his own residential purpose. So three ways. The first way, a person can let out the property and receive the rent. Second, he can use the property for his own business or profession. Third, he can use the property for his own residential purpose. In this way, the property can be used in three different ways. Now, the following two conditions should be satisfied to treat an income derived from the building or house is treated as income from house property. So when the income when the income of the property will be treated as income from house property. Income from house property. So two conditions are given. If these two conditions are satisfied, then the income received from the house, from the property, is taxable under the head income from house property. What are the two conditions? The first condition, the property should consist of any building or land, building or connected with the building, or any land building connected with the building. Any building or any land which is connected to the building, from that property the rent is received or income is received. The property should consist of some structure. Structure in the sense there should be some roof, there should be some walls, there should be some door, gate. If this structure is made, then the income derived from this structure is income from house property. That means an open place is there from land. Open land is there. A person is receiving the rent from open land. It is not income from house property because it is land. There is no structure involved. If the structure is constructed, then only it will be treated as income from house property. Secondly, the assessee should be the owner of the property. Income from house property will be treated only if the owner has received the rent. If any other person has received the rent, then it will not be treated as income from house property. So two things, the income should be derived from the property, and secondly, the income should be derived by the owner of the property. If these two conditions are satisfied, then only the income will be treated as income from house property. Then special situations. Some special situations are there where income is derived from the property, but it will not be treated under income from house property. It may be treated under income from other sources or income from business. These are called special situation. Rent received from the property, but not taxable under income from house property. What are the situations? First one, if a building is let out to the employees whose stay is incidental to the business. Example, a company is there, a business organization is there. A business organization has constructed some quarters, staff quarters, and given these staff quarters on rent to the employees. So why the business has constructed the quarters and given the quarters on rent to the employees? So that the business can run smoothly. That means the employees can come quickly from their quarters to the company. Otherwise they have to travel a long distance. So rent received from this staff quarter is not treated as income from house property. It will be treated as income from business. Because to run the business smoothly, the quarters are made and quarters are given on rent. Rent is received but not taxable under income from house property. It will be taxable under income from business. And any expenditure incurred on those property, on those houses, it will be treated as business expenditure. It will not be an expenditure of house property. It is business expenditure. First point. And you remember this point because this point we are going to come in the problem also. Then where the tenant has sublet the house. Subletting means the tenant is letting the house. Actually, a property will be let out only by the owner. Only by the owner can let out the property. But sometimes the owner of the property has given the right to the tenant to give the part to somebody else. Suppose if I am having a 3-storied building and I have given this 3-storied building to you. You are my tenant. So every month you are paying me 1 lakh rupees as rent for the 3-storied building. But I have given the right to you. I told you that you can give the rent, give the property, some part of the property to another person on rent. So you are having the right. From the original owner of the property, you got the right. What you got the right? You can let out a part of that building. So out of 3 floors, 1 floor you have let out the part to another person. In that case, you are a tenant and also you are a landlord. From my point of view, you are my tenant because you are paying the rent to me. From the person to whom you have given on rent, From that person's point of view, you are the landlord. So you are receiving the rent and you are paying the rent. You are paying the rent to me because you are my tenant. You are receiving the rent from your tenant. So the rent which you have received is called subletting rent. It is called subletting rent. Income Tax Act says if a person has received the rent from subletting, it will be taxable under income from other sources. So whatever rent I will receive, it is taxable under income from house property because I am the owner. The income received, the rent received is taxable under income from house property. But your income, you have received the rent. So whatever rent you have received is taxable in your hand under income from other sources, not under income from house property, because you are not the owner of the house. Second point. Third point, rent of the land and rent of huts or from tents will come under the income from other sources. Rent from open land. Suppose sometimes a person is having an open land. So why to keep that open land, a boundary is constructed and the open land is let out for parking or any other purpose. Open land, no construction. Or huts or tents. So in which there is no permanent structure. So any rent derived from land, from hut, from tent, this type of income will be taxable under the income from other sources, not under income from house property, because there is no permanent structure. There is no structure. Next, where the ownership is a dispute, the ITO will decide on some reasonable basis the rent receiver will be assessed. Sometimes the property will be in dispute. For example, a house is there which is let out, but the ownership of the house, there is a quarrel, there is a dispute. Two brothers are there. Two brothers are fighting for the ownership of the house. Now the house was let out. Some income is received. Income tax officer says, Income Tax Act says, whoever is receiving the rent, whoever is getting the benefit from that house property, they have to pay the tax first. The decision will be taken by the court later. The dispute will be settled later. The verdict of the court will be given later. But right now, who is receiving the rent? He has to pay the tax. That's it. Similarly, if the house is mortgaged, the mortgager is liable to pay the tax. The house is mortgaged. The person who has given on mortgage, that person is liable to pay the tax. So these are the special situations you have to remember, because these points you are going to come across while doing the problem. Next comes method of computing the income from house property. How to compute the income from house property? From here onwards, concentrate more, because these points we are going to apply in the problems. Now, let out house. Actually, we divide the houses into two types, two methods. First, let out house. Second, self-occupied house. Let out house means the house which is given on rent, and every month the rent is received from the tenant. Let out house. Self-occupied house, the house which is not given on rent but used for our own residential purpose. Own residential purpose. Self-occupied. Now, let out houses are again divided into two categories when Rent Control Act does not apply. Actually, we have a law. That law is called Rent Control Act. But this Rent Control Act is not applicable in all the areas. In some cities, this Rent Control Act is applied. In some towns or some rural areas, this Rent Control Act will not apply. So in this way, we divide the let out houses into two. Those houses which are not governed by Rent Control Act. Second, those houses which are governed by Rent Control Act. This point you have to remember. What is the difference? In the coming problem we will discuss. The provisions are different. How to compute the income from house property when the house is governed by Rent Control Act or the house is not governed by Rent Control Act. Second, self-occupied house. The self-occupied house can be used for running our own business or profession, or the self-occupied house can be used for our self-occupation, like this. Two types of self-occupied houses. Now, basis of charge. How to compute the income from house property? Normally, Income Tax Act says the income of a person, the source of income of a person depends how much income you have received, how much income you have earned. So, income tax will be applied on the income which you have earned or income which you have received. On that basis only income tax will be applied. But in case of house property, how much income you have received is not the criteria. The criteria is what is the earning capacity of that property. On that earning capacity, you are liable to pay tax. You are chargeable for income from house property. Earning capacity of the building. Simple example I'll give you. Suppose in a posh locality, you are having a flat. You have given the flat on rent to your relative for 20,000 rupees per month. The monthly 20,000 rupees rent you are receiving. But according to law, the rental value of that property, of that flat is 40,000 rupees per month. That means other flats in that area are fetching a rent of 40,000. But you are charging rent only 20,000. So you are getting an income of 20,000. Income Tax Act says your tax will not be charged on 20,000. You are liable to pay tax on 40,000 income. You will say, why 40,000? I am not charging 40,000. I am not getting 40,000. So Income Tax Act says, why you are not charging 40,000? You should charge according to the area, according to the local area. How much other buildings are charging, you should charge the same way. If you are not charging, it's your problem. We will put the tax according to earning capacity of that building. The earning capacity is 40,000 per month. Now you are liable to pay tax on 40,000 per month property value. That is called basis of charge. In simple words, we can say the income from house property does not depend only on rent received. It depends on what is the earning capacity of that property. That's it. Now, annual value. Very frequently in examination, a theory question will also be asked, what is annual value? This word is very, very important for income from house property. Because income from house property is computed on the basis of annual value. So what is this? Income from house property is computed based on annual value. So according to section 23, subsection 1A of the Income Tax Act, it says the annual value of any property shall be the sum for which the property might reasonably be expected to be let out from year to year. What is the earning capacity of that property? What is the expected sum of money which can be received year after year by letting out that property? That is called annual value. Suppose if you are having a property, so what is the expected sum of money which you may reasonably be expected to receive year after year if you let out that property? That is called annual value. In determining the annual value, the following 4 factors must be considered. In every problem, in the coming videos, I am going to solve the problems on computing the income from house property. Every problem, first of all, you have to find out the annual value only. Without annual value, we cannot go for computing income from house property. So what are the factors to be considered? What are the factors to be considered for calculating this annual value? 4 factors. The first factor is municipal rental value. Simply you remember MRV, municipal rental value. Secondly, actual rental value, ARV. Thirdly, fair rental value, FRV. Lastly, standard rental value, SRV. So simply remember MRV, ARV, FRV, SRV. Municipal rental value, actual rental value, fair rental value, standard rental value. By considering these 4 rental values, we are going to calculate the annual value. We are going to find out the annual value by considering these 4. Now what does it mean? I am going to explain you. Municipal rental value. The rent of the property which is fixed by the local authorities or municipal authorities. According to our constitution, law, the municipal taxes will be applied according to the value of the property. The property value will not be same at all the areas. In some areas, the value of the property is more. In some other areas, value of property is less. So, according to the value of property, municipal taxes will be applied. So, Income Tax Act says the municipal taxes, municipal rental value is the rental value which is decided by municipal authorities or local authorities. In every problem, it will be given. Then second, actual rental value. The actual rental value is the rent received from the tenant by letting out the property. Suppose I am the owner of the house, I have let out the property to you. As per the agreement, you have to pay 20,000 rupees per month. So every month you are paying 20,000 rupees to me. So this 20,000 rupees which is received or receivable is called actual rental value here. Next comes fair rental value. The fair rental value means the rental value of the property which is reasonably be expected to receive every year, or the rental value of other properties in the same street, or same locality. In same locality or same street, how much the rent other buildings are earning, fetching. That is called fair rental value. And fair rental value is also called the notional rent. Next one is standard rental value. When the house is governed by Rent Control Act, the Rent Control Act will fix the rental value. So the rental value which is fixed by Rent Control Act, that rental value is called standard rental value. That's all. Last one is procedure to compute the income from house property. What is the procedure? The first step is you have to calculate the ERV. ERV stands for expected rental value. First step. Second step, you have to calculate the GAV, gross annual value, GAV. Third step, you have to deduct municipal taxes or local taxes. Deduct municipal taxes or local taxes from GAV. What you get is NAV, net annual value. So GAV minus municipal taxes is equal to NAV, net annual value. From net annual value, deduct the deductions allowed under section 24. In the next video, I am going to explain you about the deductions under section 24. So what is the procedure of computing the income from house property? First, you calculate ERV, expected rental value. Second, you calculate the GAV, gross annual value. Third, deduct municipal taxes or local taxes from GAV. What you get is NAV, net annual value. From net annual value, deduct the deductions under section 24. You will get income from house property. That's all. So in this video, I have explained you what are the incomes that will be treated as income from house property. What are the conditions to be fulfilled when an income is to be treated under income from house property? And when special situations, when the income will not be treated under income from house property, it will be treated under income from other source or income from business or profession. Next, I have discussed about the method of calculating the income from house property. Two types of houses, let out house and self-occupied house. Houses which are not governed by Rent Control Act and the houses which are governed by Rent Control Act. Secondly, self-occupied house. In self-occupied house, used for own self-occupation or used for running our own business or profession. Then basis of charge. The rent income from house property is charged on the basis of expected rental value, earning capacity of the property, not on the actual rent received. Then what is annual value? What is annual value? I have explained. Then municipal rental value. The annual value will be computed by considering four factors: MRV, ARV, FRV, SRV. Then last step, procedure, how to compute the income from house property. Inshallah, we'll continue our discussion on this theory of income from house property in the next video. Remember one point. Before going to do the problems on income from house property, first of all, not once, twice, thrice, 4 times, you watch this video and the next video. If you are thorough on the provisions, provisions how to compute the income from house property, then you are understanding, easily you can understand the problems. Otherwise, if you skip these videos, you cannot be able to solve the problem. Inshallah, we'll continue our discussion on income from house property in the next video.